Hello, everyone. It's been a little while. Ben Keedy with Wealth Crypto Podcast again. This time I'm on with Frank Cushner. Frank was introduced to me by a buddy, but Frank is based in Dallas and has a background in financial services. So maybe without much further ado, I'll just pass it over to you, Frank, and we can go from there.
Thanks, Ben. Good to be on. Yeah, so I we share a mutual friend in the crypto space, and I had him on my podcast. He brought you up and said we should collaborate, and I think this is how it all happened. This is all how it
I
happened.
didn't know he was doing his media hits yet. I'll have to go check that out.
Yes, for sure, for sure. Yeah, I do a segment called Money in the Bank with Frank, and like you, I handle things on the pecuniary side of things, all things to do with money. So. We this week, yeah, talk about a perfect opportunity to talk about a whole lot of crazy things going on. We got a run in
my God,
crypto. We've got a run in crypto. We got a run in the banks. We got a run in the market. All these things shouldn't be happening at the same time.
Yeah, something's gonna break.
Yeah, right.
Yeah, yeah.
So I
well,
got
maybe tell me a little bit.
Yeah. I was gonna say I got started very similar. I grew up here in the North Dallas area in Plano. Went to elementary school all the way up through college. I ended up going to University of Dallas, private Catholic school here. In my last semester of college, I actually was involved in a traffic accident. I was actually hit by a car, and
Okay.
I got a little bit of money. A little bit of scratch, which
Oh,
was,
nice. There you go.
it wasn't a lot, but it was, to me, it was a Cadillac. So I tried to
Mm,
figure out what to do with it. And, just
yeah.
imagine, and I can imagine probably a lot hasn't changed now, but just imagine like a, 20 something, 20-year-old walking into XYZ brokerage firm and saying, I want to talk to somebody about investing some money. What do you think happened?
Yeah. They'll sell you an annuity probably. Or
Yeah, they wanted to, right?
yeah.
Luckily, I ended up meeting just a really kind guy at the bank that I banked at the time, and he gave me a lot of advice, gave me plenty of time. I came in quite a few times just to chat with him, and he said, "What are you going to do when you graduate from college?" And granted, I was getting my degree in history, right? It's like, I don't know.
Nice.
He
It's
steered
like Wall
me.
Street grad.
Yeah, he totally steered me.
Yeah.
He actually was from Massachusetts. He worked for um, a firm that ended up getting taken over by Merrill now, but he walked me through the whole process. He said, I worked at a company out of Massachusetts and we were on the phone 24/7. You dream about it, it's horrible, and then finally you get a job at a branch. And that's exactly what happened. I ended up
Yeah.
working for Fidelity for several years. They transferred me up to the Wall Street Investor Center up in New York, where I worked for
Okay.
a couple of years. Left there to go to work in private equity venture capital in the right in 1999, 2000. That worked great.
Yeah.
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 Ended up back institutional. I ended up working back for Merrill Lynch. And then in 2003, spun out and started my own RIA when RIAs were brand new. So
Yeah. Yeah.
started my own firm back then and have run it ever since.
Okay, cool. Yeah, no, that's a great story. So I guess along the way, just to jump right into the crypto thing, where did you first hear about it? What was your attraction to it? Everyone's kind of got their own funding story. I'd be curious to hear what yours is.
I have one of these great horrible stories. So, everyone hears about the guy that, lost all sorts of Bitcoin. But in my
Oh
case,
yeah.
yeah, I'm lucky in that I don't know how much it is. So years and
Oh,
years
okay, there you go.
ago, yeah, years and years ago, I had a friend whose son told me about crypto, and I had just relocated my office from New York to New Jersey, and I had a number of machines that were doing nothing. And so my friend's son said, "You need to start mining,
Oh,
Bitcoin."
no
And I
way.
had no idea what it was. So of course I had my
Yeah.
server mining crypto, for
Yeah.
a while. And a couple of months go by and I hadn't been to the office because I was working from home. And I
Sure.
show back up at the office, and honestly, it was probably a year that it had been just running. And this is, think 2012, right? So
Oh,
this is back,
wow.
yeah.
Yeah. So
So yeah,
that's
so
great for you.
yeah. Except that I show back up in the office and all the computers are gone. And I was like, "What happened to the
Oh
computers?"
no.
He goes, "Oh, well, I told the IT guy that he could just go ahead and reformat them and use them." So that
Brutal.
was that was my intro.
That's That's really, really unfortunate.
Yeah, but I do have a great friend who lives in Miami now. Bought a place cash. I wonder how he did that. Anyway, so I had a buddy who was
Yeah.
telling me about it many years ago, and he was going from Starbucks to Starbucks and picking up Bitcoin for like $8 from somebody that would like just different people on Craigslist, meeting up with him and paying him
Yeah.
cash for their thumb drives filled with crypto.
Oh,
So
no way.
yeah, he did well. He's still a good
That's
friend and
crazy.
co-investor in some different private deals with me, but
Yeah.
he do he do.
Yeah. I mean, that's not nearly as like my story is much more simple. Like I had a friend in the Bay Area working venture who heard about it through the grapevine,
Mhm.
and that was basically my exposure to it. So it was quite simple. I didn't lose a treasure chest to my IT administrator. That's a bummer, but that's a good story though.
Yeah, look, everyone's heard stories. I heard about a guy. Well, look, here I am. I did some silly stuff too. I'm sure it's just gone forever, right? No
Yeah,
getting it back. Gone.
yeah, that's the hardcore libertarian aspect of it that a lot of people know and love.
That's
So,
right. That's right. That's right.
well, how does the crypto thing influence what you do day to day? So you still have your RAA. How do you talk to clients? Like, are they interested? Do they care? What is crypto's influence on your practice today?
I should have known that it was the top when my clients in the same day, three of them said that they wanted it. And
Yeah.
as you well know, that because it's not, regulated, because there's no, all of my licenses don't allow me to really talk about it.
Yeah.
All I could do was GBTC and ETHE, right? Like just a couple of the ones that I
Oh,
really
okay.
felt that I was able to do. And so I did. I threw some money into those, and obviously they haven't panned out over time. Well, we'll see over time because I'm not a trader. We do
Sure.
have some positions in it,
Yeah.
and we'll see what happens. But it's really kind of quite a shame. I actually did I did a radio show once where a lady called me up and she said, "I have a question." I was like, "Sure." And she said, "My son is, is a high school senior, and he tells me that he's a millionaire and he doesn't have to go to school and he doesn't, he's not going to go to college. What should I do?" And I this is one of those moments where you're going to laugh or
Yeah.
you're going to cry. And I just laughed. I was like, "Okay, we need, you should call me after the show's over." But ultimately, yes, it could be true. And if
Yeah.
you have any chance of figuring out how to get a hold of the keys to his wallet, he's not 18. So technically it's your money if you can get your hands on it.
Yeah. Yeah. Good luck though.
Yeah, but good luck. So it's really frustrating. And I know that you had Rick on
Yeah.
earlier, and just like him, I feel like he might have retired and this is just his second calling, teaching advisors
Okay.
about this because, I tried to apply to the CFP board not too long ago. They were looking for new board members, and they were asking for someone
Yeah.
that actually knew something about crypto. And
Sure.
I know enough to be dangerous and then some. I was lucky enough to invest in a private company that in a private company that actually is a crypto broker dealer. And
Oh, okay.
so having done that, I have seen the institutional side. I actually last week,
Yeah.
whenever I was on my way back from West Texas, we went by the actual mining site where they're using natural gas to mine Bitcoin in the oil, in the
Yeah.
immersion technology, which is really interesting because there's a handful of people that are actually doing that at scale, and they are, which is really fascinating. So I actually
Yeah.
understand so much more than I'm able to talk about, which is really frustrating
Yeah.
because you're supposed to go to your professionals when you have something that you need help with, right?
Yeah. So are you saying you're specifically limited by like a Series 7, I guess, with the broker dealer?
Yeah, the
Or
broker. So I clear through a firm. By the way, yeah, anything that I say here is, obviously it's educational
not
purposes
investment?
only. It's not investment.
Yeah, I've got a disclosure too that I've
All
got
right,
to
good.
Yeah.
So
Yeah.
I actually, we were going through an audit. We were going through I believe an SEC audit, and I got a phone call from one of the partners at the firm, and they said that, yeah, we may have some problems with your exposure to these ETFs. And I was like, well, they're not, first of all, but yeah, ETH and
Yeah.
GBTC. And I said, well, okay, but it's discretionary and I'm not selling it at a loss because the regulators think that I'm not capable of making
Yeah.
investment decisions. So no, just tell them that they can go away, and it's frustrating because I probably know more than they do. you know, can you hear me? I can't hear him.
We lost your audio.
Yep. Yeah.
There
We just came back. We can
All right.
touch, yeah, we can touch that up in post.
Yeah,
But
yeah, for sure.
let's see. So I lost you when you were talking about the regulator basically saying, "Hey, what are you
Right.
doing with these?"
Right. So
Yeah.
so we were going through that audit. We are going through a standard audit, and I guess my accounts kind of popped up because they were looking to see who had exposure to crypto. And I'm discretionary. I'm a
Yeah.
institutional, and so they reached out to me and asked me what I thought, and I said, well, I'm not selling it just because you think I should take a loss in it. So anyway, so
Yeah.
I applied for the board membership to the CFP board to see if I could try to push through some regulation and or like give some guidance, and was sent a Dear John letter. Thanks, we're not interested. Have a great day.
Yeah.
So
Yeah.
yeah.
What I mean, that's a good pivot maybe to obviously the timeliness of all of these bank failures and but I guess maybe my question is, what do you think the hesitation is around, enabling crypto to be a more advised on asset? Is it basically security versus commodity and SEC versus commodities, futures, blah, blah, blah? Or like, where does your head go? Like, what do you think needs to happen?
I can see it on both sides. Ultimately the job of the regulators is to come in after somebody does something really bad, right? And we had that moment. We had that moment with FTX.
We had a few.
Yeah, and
Yeah.
when the regulators come in, they usually obviously overregulate. The whole idea behind DeFi is that we don't want it to be regulated to any particular degree. But like if we have people that are going to do harm to the end user through fraud, something needs to be done. How that's handled, I don't know. So it's a cart horse thing, and I think that you've got the regulators, you've got the SEC, you've got the Treasury Department, you've got so many different people that want to regulate it differently, and that's the pickle, is that they don't know who should be regulating different things. Like, is it a commodity? Like, which of these is commodities? Which of these is securities? Which of these is private placements, right? And each one of those systems have their own rules, and some of these problems are the same thing we're seeing in the banking system right now, right? We've got the U.S. Treasury, we've got the Treasury Department, we've got the Federal Reserve. Both of them handle two different things that intermingle, right? But this is where we're having the problems with the bank failures, right? You've got the Fed, who theoretically says, look, we can fix inflation. Anything that breaks, we have the tools to fix. Okay, something broke. Are they going to keep with their mandate, which is what? Unemployment and interest rates, right? To get rid of inflation? Yeah, we'll find out literally tomorrow. The problem there is that the Treasury, I kind of feel like they're failing too. So like basically both of those people that have their one job, if they were going to do it right, if we do, and checking our premise, if we actually look at what those numbers really mean, is housing really only up X? Is CPI really those numbers if we check our premise? If those are true, then we have substantial inflation and they need to keep raising interest rates, right? But again, we need to know if those numbers are true. And then you've got Treasury, which is spending money right and left outside the United States, which takes money, and screws up everything that the Fed is trying to do. Now, just imagine that with a brand new asset class, crypto. You really think they're going to be able to get their finger on the pulse? So I am encouraged to have seen that at the very least, if we take all the different coins out of it, that like Bitcoin is starting to hold up and you're seeing a store of value to some degree with what's going on with the bank runs, which definitely want to talk about too at some point. But I hope I roundabout answered most of that.
Well, I mean, it's just, such an interesting time because, like, I think the crypto industry itself has been asking for clear regulation. Like, give us a playbook that we can play by, and just know that we can go innovate within that set of rules. Like,
Hmm.
just don't want it to kill business and innovation also. But I guess where I'm going with this is regulation for the sake of regulation might not even necessarily be a great thing because we, air quotes, regulated post GFC. And I read some reports that at least the San Francisco Fed knew that Silicon Valley Bank was acting out at least for a year and a half or so, and that they were getting notifications about it, but nothing ultimately happened. So, like, the regulation was there, but there was no actual, I guess, enforcement of it to, prevent arguably a very strange new paradigm. So,
Right.
I guess,
I forwarded you an interesting article from the Bates Group. Actually, a friend of mine in the city wrote this article. He's an expert witness and has been working in fixed income for years. I sent you a link that you should take a look at. It really goes into detail
okay.
about kind of what happened. My take on it is they had poor risk control. I don't know if anyone's ever come out really and figured out whether or not they did have a chief risk officer or not at this point, and their held to maturity issues, the mismatch versus that. But I mean, look, it's as simple as saying as we had an inverted yield curve. We knew that this could happen.
Yeah.
I think the single biggest problem is that as working people, we expect that when you put your money in the bank that it's going to be there tomorrow. And they're not paying us any interest already. So you hope that at least your money's going to be there, right? You're not investing it in a brokerage account. And I've heard these assumptions that, like, well, you should have put it in the right bank. Really? You're going to tell somebody who owns a bakery or someone who owns a flower shop or someone who owns, even me, right? Like, do I have access to look into their mark-to-market portfolio every day? They're held to maturities. No, it's unreasonable to think that.
No.
So realistically speaking, technology is so good now that before, maybe people had one bank account, one banking relationship. Now people have more than one. And so when there's a run on one bank, all you have to do is hit this little button, and it's not over at First Republic Bank. Now it's over at Chase. It's at JP Morgan, or it's at Citi. And the speed that can do, that can be done, is no bank is going to be able to survive that kind of run on a bank. So, just as FDR said, the only thing we have to fear is fear itself. This has been happening. This is not new. We have had the same problems and or limitations with our banking system for how many years now? It just so happens that you've got communication from people that pointed out, not a lie, right? It's not a lie that, look, Silicon Valley could fail. And if my investments or portfolio companies have money at XYZ bank that may fail, and I'm their board member and I'm going to tell them that there could be a run, you need to get your money safe. There's no way to avoid that pickle and that dilemma, because as a fiduciary, they had to say that, right?
Yeah. It's really interesting because I'm sure you've heard about, like, that text message stream of, all the Bay Area super VCs investors, and it's like a coordinated Twitter attack on a bank. But, like, this is the world we live in. Technology moves fast.
Mm-hmm.
You would think that they would have had systems and processes in place to kind of not take so much duration risk, at least for one. But
right. Well, that goes back to, for Silicon Valley Bank, that goes back to, did they have proper oversight and proper risk control? And my understanding is they did not. Now, if you take a look at some of the other financial institutions that are at risk right now, I think, there's a lot of people that are, throwing things around about First Republic Bank. It's my understanding that they are a traditional bank and they're, like, responsible to whatever degree. And I think situationally, they are just physically too close to the situation. And so they could have been the next one to fall. I have a story about the interest rates and what happened in the GFC. Vividly, this happened. I remember this vividly. I was actually at the office and I get a phone call from my assistant's wife, who was the head of a desk at a big firm. And she mentioned that do not go after any of our, because, you know, we're wolves, right? We're going to go after anybody for anything, right? Yeah. So it's like, hey, I can get a new contact over at XYZ investment bank by saying this guy's going out of business. They literally said, do not even hint, because we're the next bank to fail. So it was like standing up and it can happen at any time. You want to try to avoid that, especially when communication throughout the internet it's a little more efficient than it used to be, right?
Yeah. I mean, I guess that you've been at this a little bit longer than me. So maybe what would you say is like some of the big changes you've noticed from living through a variety of, you know, ups and downs over your career? What has changed, I guess, in how people approach markets, invest, the psychology, like?
Right. So when I first started and cut my teeth, I want to take that back. Not when I first started. When I was on the phone side, I had an excellent experience in education, but still didn't really know what was going on because I didn't have money of my own. I'd never. Experience is what you get when you don't get what you want. And I didn't have any experience at the time. I have plenty now. I have plenty of experience now. I want to say pre 2000, we had interest rates moving all over the place. They cut by a quarter of a point, or they raised by a quarter of a point, or half a point, for heaven forbid, 3/4 of a point. And that was when the money supply was substantially lower than it is now, right?
Oh, yeah.
Now we've got 31 trillion. I don't even know what the numbers are up to date, but like raising a quarter of a point or a half a point is a substantially different number than it was even in 1999. And I don't think people understand what that means. We have a mutual friend that I asked him right when this all started to happen. I was like, "You're trading institutionally. What are you thinking?" The answer was, "I graduated around 2008. It's been quantitative easing, QE's infinity, since I got out of college." I truly believe that people just don't know what this means. I feel like it's just been such a gambler's mentality that people just expect a 20%, 30% return over time and buy the dip. That's all anyone's ever seen since anybody has been investing in the past 20 years. And I think the chickens are going to come home to roost. I'm trying not to be negative because I know how bad it can be, but I'm worried.
Yeah. So, I mean,
I'm effectively barbelled in the client portfolio for the most part. I've got some securities that I can't sell. Then I've got a big chunk of cash and treasuries, and then I've got a short position on one of the indexes, and effectively that's making us kind of flat, which I'm cool with. I don't mind sitting out. I'm not here to gamble. Most of my clients are in the stay rich camp, not the get rich camp. And so we're trying to just weather it until we get some real direction.
Well, I guess that's the hard thing about where we sit currently is where do you go? Like what asset classes, what investments can you take to weather this storm as best you can? Policy definitely made it difficult because, low rates, high equities, high bonds, high real estate, high everything. I don't know. What do you think? How do you advise clients there?
By virtue of the fact that people are asking the question whether or not the treasuries are safe and the banks are safe is already showing that we have a lack of trust in our government. And, when was the last time you saw on CNBC anyone specifically talking too much about the debt ceiling? Right now, we've got a whole different problem to work on now. We'll deal with that later. It's all part of the same problem, though, right? I mean, the fact that the federal government people are worried, and then you've got, let's talk geopolitics, right? We've got China and Russia meeting and saying, "Hey, we're buddies." I mean, It's not what I do for a living, but I am a macro guy, and I
Yeah.
can see that things aren't good. we're doing some
Yeah,
things wrong.
it's really strange. Like trying to so when I lived through the banking crisis, the first one, I guess, rather in 2008. I'd just gone off to college, so I was admittedly focused on other things, right, rather
Sure.
than the collapsing economy.
Yeah.
But I lived through it, and I have studied it to a certain degree. And now that we're on potentially the precipice of another one, I kind of catch myself looking around, and it's like, how worried should I really be? Like what precautions do we take? Like,
Can we talk about that for a minute? And like just to unpack that just a little bit more, the thing that I find really fascinating is, so last week I went on a little drive with my wife to Marfa, Texas. She's in education, so it was her spring break, and we had this plan for quite a while. And why is it that every time that I have a vacation plan that the world decides to try to go to zero, right? And so I've got my earbud in my ear, I'm for that Thursday through the Monday that we were leaving, I'm glued to Bloomberg. I'm on the phone with the president of a bank in New Jersey where one of my clients has a substantial amount of money on deposit. Obviously, we were trying to protect that. And like, there's no reason that I need to be on the phone with the president of any bank, right? But the fact that I was means that we're worried, right? And the fact that he actually took the call and called me from his personal cell phone means that he's worried because he knows that all of a sudden, everybody who hates us retail guys is worried about a retail guy. Now you know that the world's upside down.
Yeah.
So ultimately, it's just crazy. We're just in a weird place. And what I wanted to say is that there's so many people that are uncomfortable with where we are and are asking where to go and where to put their money. That just goes to show you that no one knows. And that's the biggest part of the fear, because as we all know, while Wall Street hates uncertainty, it also thrives on uncertainty. So you've got people ripping each other apart. Like I just find it so fascinating. I did speak to somebody at First Republic Bank that works there that is a dear friend of mine, and I had mentioned to him that I've been thinking about him all week. If there's any issues, I'm more than happy to help you land on your feet if something happens, so on and so forth. Everybody that I know likes that bank a lot, and he said there were a couple of times where he was worried. There's a couple of times where he wasn't, and there's a couple of times where he has no idea. And I feel like that's how everyone feels, but the average person who has no idea where we are and how precipitous this fall could be, because nobody knows, right?
Yeah.
So it's kind of frustrating that like the average American doesn't realize that this is a big deal. And the reason it's a big deal is that when was the last time you went to JP Morgan or Wells Fargo or Citibank or Bank of America as a small mom and pop shop and asked them to borrow money? Never.
If you're a billionaire's son or daughter, then they'll talk to you. But we don't. I remember having that epiphany. This was years ago now, but I finally realized like most wealth management services they were traditionally built are not for normal people, right? And if you really wanted to make an impact on people's lives, you don't need to worry about 0.01% that are JP Morgan, UBS, Credit Suisse clients. You need to worry about, that actual true 99% that can avoid credit card debt and, put a little money away and live within their means and just do like the basics well.
And hope that money's still in the bank whenever they go to get the money out.
Yeah. Well, as long as it's FDIC insured, which, even for a lot of people, like if you got $250 in cash at a bank just sitting there, like you're doing okay, most people don't even have remotely close to that. So one of my lessons, I guess, the quantitative easing experiment is just how extreme the differences between the haves and the have-nots has become. And I think when the history is written, they will look back and actually write that piece of history, but they don't want to admit it, particularly right now, because we're still hovering right around the highs. So.
Yeah, it's I just find it really troubling that when you try to, when you think you're about to retire, you get to the point where, and I've I work with people that are really close, and
Yeah.
you could make 30% every year for the past 10, and then you lose 50% in 1 year. All that, you see it go away a
Everything
lot
changes.
quicker. Everything changes, yeah, and it's
Yeah.
it shouldn't have to be that way. But people don't like to talk to professionals anymore. People your generation and younger are doing it all on their own, and to some degree, that's great because that the educational material's out there, but the experience and the feeling of losing that money is the first time you lose a substantial amount of money in the market, boy, you start to pay attention to it, right? And that's not something you're going to get off an app.
Well, part of the problem too, like you're kind of alluding to with all this information being online, is like I'm sure you've seen on Instagram and TikTok and Twitter, there's no shortage of people trying to, sell you my trade strategy, follow my trades, which really is just market manipulation, like, but that stuff's everywhere.
And like there's just not enough. There's not enough firepower out there. There's not enough regulators. There's not enough anybody to be able to go after that. I was blown away when AMC and all the meme stocks started taking off. I was like, this is a blatant violation of the Investment Advisors Act. I mean, you can't tell people when to buy and when to sell. You're not a financial advisor. You're not licensed to do that. Like, tipper tippy, but like they're not going to go after them. And so that bred this gambling mentality. Today, the market ran up over 1% and change. Why? Is there anything different today than yesterday, really? No. Right?
No.
The thing that's different, is that these tiny little regional banks and these smaller banks, these relationship banks that are paying the same, if not a lower amount for CDs and such, they're the ones that actually will take a chance on a person. And so if you have an idea and eventually you outgrow them and move to a bigger bank, that's one thing, but like they're necessary. So they need to be protected. And the only way to do that is to have an adult in the room. We need the government to actually do their job and help these guys out. Right. And I think they're working on it, but they also have to remember they want to lose jobs right now. They want to put people out of a job and they want to shrink people's budgets. They want people worried. They don't want people buying stuff. And so what did they do? They did exactly what they needed to do. And ultimately they do have the tools to fix it. So I'm hoping tomorrow, I'm hoping that they do continue to raise rates. And I'm also hoping that they insure deposits. And if the other companies go out of business and then they get consolidated or something, that's one thing. But ultimately, I do want them to deal with inflation because it's not a good thing, because the people that are the have-nots that you're talking about are the ones that are mostly affected by not being able to buy food.
Yeah. There's like so much to unpack. I was trying to think, it was like, how am I going to respond to this? And then there's just like point after point after point.
Sure.
What was I going to say though? I mean, so that was it. So like you'd said you'd hoped that they would insure deposits.
Mm-hmm.
I've read a lot of reporting that can create a moral hazard, particularly for the largest, most sophisticated banks to, privatize gains, socialize losses all over again. I guess the question is like, what is worse? Like
I agree with
not doing it or allowing them to do it, and then do small regional banks go away over the course of crisis after crisis? Like what? Like is the problem really just the Fed putting us in this situation in the first place? Like what? There's no real answer to that, and I assume that's what Washington is struggling with day in and day out. So.
Right. I think there is some portion of moral hazard in that you definitely do not want these guys to know that they're going to be bailed out, and so they want to go out and buy more, hold to maturity stuff or having more, loans to people that they just wanted to do handshake deals with, for sure. Right. There's definitely moral hazard, but there's also something to be said for people. Like, if you do not want there to only be one bank at the end of the day, someone like a JP Morgan Chase or something, if you don't want there to be just one bank, then they have to do something to make sure that people's deposits are safe. And I don't know how they do that either, just like you don't. It's been going on for years, right? We've had a traditional banking system that works, and it's very strong and resilient as long as there's not a run on different banks. So I don't know how they solve that, but the only thing I can think of to stem the problem that we have right now is for somehow them to come out and just to, let's say, your deposits are safe. We're going to go through, I'm sure they have plenty of technology to run through these balance sheets. From what I understand, there was like maybe some junior level people in the banks that aren't the big banks that had the flags that weren't listened to. And then as they get to a certain size, maybe they start looking at it more and pay attention to it a little more. And if that's the case, we all know that the big firms get the more regulator eyes and vice versa. I don't know what they have to do, but there's plenty of smart people out there.
Yeah.
They got to do something.
Here's an interesting one. What if they didn't do anything? What do you think would happen if they just threw up their hands and said, you're on your own?
I mean, pure market system, I guess it'd work itself out eventually, right?
Yeah.
I mean, I'm sitting on a bunch of cash. I'd be cool with it. But But then again, I'd also have a lot of people that are friends of mine living at my house.
Yeah, you'd have to get a bunch of bunk beds on Amazon.
So I don't know. I mean, I think it probably would shake itself out, but we'd probably end up at the same place, but a little uglier. It would then be, the bigger banks gobbling up littler banks like they're doing right now. You saw those CoCo's loans, right? The AT1 like loans that are just getting written down. That one, I think, if anything, is going to be ugly. That has, like, the Europeans didn't break that precedent. Like, the fact that you didn't wipe out the total equity, like the stockholders' equity, before you blew up their tier one. That's that right there. I think is a critical question. I do not know how do you justify that on the cap table?
They did it unilaterally, like with special privileges, blah blah blah, that original investors didn't sign up for, right? Who knows? I have a family friend who's big in real estate here and commercial real estate in Greater Sacramento and Northern California, and he thinks the bomb that's about to go off is commercial real estate. Mm-hmm. And I've started to see some rumblings about that in CMBS, and I guess that's the whole point. Like, who knows where the black swan comes from? But there's a lot of weird things going on for sure. Yeah,
the commercial real estate space is scary. But then again, there's also, and I don't know how long it takes for it to happen, but as the pendulum swings the other way and we will have higher unemployment, maybe people will be more interested in going back to work. Quite frankly, and then eventually people will need more space and they'll start renting it. But right now, we have a huge supply of space that people aren't using, which is not good for the people that are owning those investments, those things, and financing them, right? Yeah, it's so funny. This is right before the great financial crisis. I had a friend that worked at a brokerage firm, and they were trying to get me to sell my clients a bunch of CDOs. And I'm like, I have no idea what this thing is. And so I asked one of my clients who was a risk officer, what is this thing? And what should I put my clients in? And he was like, and he started going, and my eyes started rolling back in my head, and I started getting like, and he was like, okay, short story is like, none of your clients should ever touch any of this stuff. And then fast forward a couple of months and the market craters, right? It's like trying to understand what the CMO, CLO, CDO is. It's like, I think the best thing is like watching that movie, The Big Short,
that's exactly where I was going when he goes down to Florida and he sees all those bros flipping homes, and he gets on the phone. It's like, short everything, all of it. Biggest positions we can.
Absolutely. Yeah. That was nuts. Oh my gosh.
I don't think I would have the balls for a call like that. Like,
I wonder, like, there's a couple of things in there that were, I know that one of the guys was going through some, family issues about somebody committing suicide. I recall, I don't know who that person was that it was supposed to be. But like, I kind of wonder if he was already so broken that he's like, what do I care if, I lose a bunch of money?
Yeah.
But I'm so angry at the world that I'm just going to sit on this position until it proves that right. Right.
Yeah. I mean, you could argue that across the board. Shoot, I bet a lot of our government officials are feeling that way right now.
Oh, for sure. For sure.
Just like, I have no idea what to do. We're just going to pick one and grit our teeth.
Yeah, exactly.
Yeah, who knows? Maybe something more positive. What is encouraging from where you sit? Like, what are you working on that's cool, that's unique, that's, keeps you going?
Yeah. So the beauty of the situation of being in a somewhat neutral portfolio waiting for a little bit of clarity is that I have more time to pay attention to the investments that I do have and being able to do more research. And I find people such as yourself more available because everyone's trying to find out what's going on. Everyone's talking. So I think it's a really fascinating time in that it is a relationship building time. And it is trying to figure out what's going to happen right now, as we know, is too late. So kind of looking ahead and seeing what is available. Like if we assume that certain companies are going to go out of business or the margins are going to compress, now's a great opportunity to look at the companies that you always did like. There's isms on Wall Street for a reason. If you liked it at 20, you're going to love it at 10. So do your research and take a look at companies and try to figure out what different management, literally the management of the companies is solid and back up the truck whenever you feel comfortable that there are companies out there that you've always wanted in your portfolio but couldn't afford at the time.
Yeah.
And plenty of time to do that now. I got access to, here's a fun one. I actually got a local college in the area to accept back some credits from college. And I took some classes and it comes with they have a Bloomberg lab. So instead of spending a ridiculous amount of money every month on a regular Bloomberg terminal, now I get to go to school and meet people and talk to them and show them how somebody that's an actual professional in the real world uses Bloomberg. And it's exciting because there's people that are in there that had no idea and don't even realize what they've got. Big box of gold.
So are you teaching, I guess, a little bit? Or
No, I'm just going as a student. I actually, I'm taking a class at the college just as just for fun, just to learn something new.
Yeah. What is the class, if you don't mind sharing?
Agronomy.
Which is it's growing stuff, right?
That's right. So one of my private equity investments, one of the investments that I'm a limited partner in is a company that has come up with a novel technology that is in the agronomy space. And so I said, well, there's a class in agronomy. I want to learn. I want to see how this works in the real world. I threw money at something that I, of course, like Elizabeth Holmes, I had no idea what I was doing.
Well, hopefully it's not quite the fraud that Elizabeth Holmes presided over, but
God, I hope not. No, but these are just fun little things to do that allow you to broaden your knowledge base on all sorts of things.
Yeah. How do you think about that? Just broadening your knowledge base and being well-rounded as it relates to just advising clients for career, like. For like one quick example for me is this podcast is totally new. Had to pick up some new skills, learn some basic editing, but it has opened that small amount of time in mostly free software has opened up a ton of new relationships to people like you that I would have never had otherwise. Mm-hmm. So it's been one of the best things I've ever done, personally and professionally. So I guess, I don't know, how does going back to school or any other things kind of to pay view the world?
Yeah, I agree that there's a lot of different. I like to think that if you're actually learning something, no matter what it is, it's going to come in handy throughout your life. Like I was still in college, and my mother had a operation that was going to require some durable medical equipment. And so as a 17-year-old kid, I noticed that there was it was an embarrassing type of procedure. Like people don't like to buy this particular product. They don't like to go to the grocery or, to the pharmacy and pick it up. Yeah. So I created like a mail order company, a durable medical equipment company. And at a young age, it taught me that you need to get a franchise tax return. It gives you all the basics Setting up any
Yeah.
company will give you all the basics for even what the major companies are going to do, right? So
Yeah.
I think just learning anything will add to your knowledge. And that was a eye-opening experience to realize you have to have your corporation set up in this way. You have to keep track of notes. You have to realize that it's a company of itself. It's not you, it's actually its own company. And so you have to write down stuff as if
Yeah.
you were making a decision for the company. And fast forward that to what I do for a living now. I never knew that I was going to manage money and help people with financial planning, but now it's really easy. I can say, look, you don't have to go to an attorney and pay a fortune to do this. You can go right online. You can set it up yourself, and you need to, because you need to protect your personal assets from your business assets. And that's just one basic example of like one thing that I learned. And then fast forward to
Yeah.
agronomy. It's just learning. For me, people just think it's learning the process. If you're a farmer, you don't just need land and seeds. You need additive and filler, and it's relying upon time, which has to do with weather,
Yeah.
and then moisture, and then what's the pH. It's fascinating, and all of these things have a solution, and usually they cost something.
Yeah.
And the way
Yeah.
that it ties into what I do for a living is that I've got a couple of clients that are farmers, and being able to understand, you always hear about pork bellies and futures, right? Well,
Yeah.
as a farmer, those are the people that really need to do futures, because if you know that your input costs, forget about labor,
Yeah.
right? But your
Yeah.
input costs are $3 a bushel, and corn is somewhere in the $4 range. It could go up, it could go down. If it's below 3, you're going to lose money, and you did all that work for free. So maybe you
Yeah.
should have futures contracts so that you can deliver that, and when you've locked in your prices, right? And that, in a
Yeah.
nutshell, how do you figure out what those input costs are? Take an agronomy class.
Yeah. 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 Go work on a farm.
That's right. That's the
yeah.
harder way to do it. These hands are a little soft. I'm not sure that I'm going to be doing
Oh
that.
yeah, no, I work inside and online for sure. I've tried to pick up some stuff and build something on the house. I actually need to build garden beds actually as soon as it eventually stops raining. But yeah, no, the extra skills have just been helpful, and I guess I've been a little bit surprised at, if you actually go about it and invest. Really, it either costs money or time. So if you want to do it cheap, you got to invest the time.
That's right.
But if you do that, then you actually do end up learning something that, like you said, will probably translate and be valuable for the rest of your life. So
Yeah. Truth. Yeah, absolutely.
no. Well, let's see. I mean, how are we doing on time here? We're, I think, almost an hour in or so. Started a little late, but
yeah, if I got 10 more minutes, I think.
yeah,
I got something
Yeah.
at 45, so.
Well, Frank, let me put it over to you.
Yeah. So let me ask you a couple of questions here. Let's talk a little bit more on the crypto side. So from the as I said, it's not my direct line. What do you think about what's going on right now in crypto? Do you think this is like part of that rolling crash that we're having? People are just taking money and putting it into the asset class that's running up. Do you think crypto has real support, or do you think that people are just piling in right now as a gold proxy or as a stability proxy, and then once everything here gets kind of worked out on the banking side, that everyone's going to dump it and go back into the bank?
Yes. Yeah. Shoot. There's so much there. Like what so I'm first of all, let's put this out of the way. So my two big positions are in Bitcoin and Ethereum. That's pretty much it.
Right.
I have a little Cardano, but that's basically Ethereum 2.0 play.
Right.
I don't get into shitcoin type stuff that's way out there. I don't do any NFTs or anything crazy. So what I like about the two positions that I really own, Bitcoin and Ethereum. Bitcoin is the libertarian. You own your money, self-banked, you control it. One thing that I'm fairly confident of is that governments are not going to be able to pull back on the spending because they will have global riots, which is really unfortunate because you either pull back on the spending in some capacity or you destroy fiat currency, is my general kind of take, which is terrifying. If I think about it that clearly, I would hope that someone at the Fed is kind of seeing this basic game theory too, right? But the nature of our politics, at least in the United States, Biden just proposed, I think, $7 trillion for this year, right? Like whether that's good or bad, like, who knows? But
Mm-hmm.
not good for the dollar and money supply. So we keep spending more money. So I think Bitcoin, I believe in it. I think it will be around. I think it serves place. I think this recent sort of bank run has been really interesting in the fact that Bitcoin has caught a bid. So I maybe I'm too close to people in my circle, but a lot of people do look at Bitcoin as a way to kind of have an escape hatch if needed,
Mm-hmm.
right?
Mm-hmm.
And then I think of Ethereum basically as like software for, everything.
Mm-hmm.
And people use software. So there will be, better softwares over time, but Ethereum's got a pretty strong market share right now. And they're developing, like, there's a ton of developers on it. They keep pushing out new stuff. Like, I don't see why that could change. So that's kind of how I view it.
Yeah, there's a article I wrote. I'm going to send it to you separately. A chapter in a book that one of my clients wrote. It was actually a really fascinating article, and it talks about social. How are the bankers, how are the financial institutions supposed to help with climate change and things to that nature? And it talks about how they need to put on a hat in that they want to invest and loan money to companies that at least are thinking about that type of stuff. In addition to that, though, he did have a point talking about what you had mentioned about the spending issues that we're having with and how we've got this huge deficit and how we're supposed to get ourselves out of it. And in a nutshell, he said, I've got the answer, but I'm not getting elected by either party, because what we have to do is we have to cut entitlements substantially to the point where, look, kind of like they do it in Europe, if you're a certain age or older and there's this kind of a major problem with you, you just have to get your affairs in order and we'll make sure it's painless. And then, so we're talking about cutting entitlements, including all of them, right? All of them.
Yeah.
And then you've got to raise taxes by a margin, and then you have to put an asset-based tax. And then in 17 years, half of the deficit will be gone. Who's going to vote for that? Who's going to vote for that? No
one. Well, yeah. And now we're, I think, hitting this like speed in like money supply and debt creation and money that it's going parabolic. If you look at the charts, like, I would argue that it will break, and this is just, back of the envelope idiot math here, but I would argue that that will break faster than, cutting the deficit by taking our medicine.
Yeah.
So I don't know. I really don't know. It's an impossible thing to think through, right?
Yeah.
And you never hear it spoken about, like on campaign trail, nobody's talking about Social Security Trust Fund going bankrupt in 10 years. Well, nobody talks about that.
Well, of course not. They're not part of it.
They're
not subject to it.
Yeah, they get raises every year.
That's
they get
right.
a pension immediately.
It's there's so many different little things that are kind of funny about government, but right. I mean, like, if you can vote yourself a raise, why wouldn't you? Right.
Yeah. I mean, but I guess the flip side to that, and we kind of touched on this earlier, is that the younger generation is paying a lot more attention to money overall, I would argue. And I think these tools offer us a lot of hope to, just make the world ultimately a better place. But there's going to be, I think, a bit of a learning curve along the way.
Mm-hmm.
Right. So I don't know. I'm optimistic about the younger generation, certain older people in politics going away forever.
Mm-hmm.
I think we're right on the cusp of like a generational sort of a paradigm shift, but I think we're going to have some rough times most likely before we get there.
Yeah, I've got a friend who always says something funny, and it cracks me up, and I sure hope he's wrong, but he always says it's going to get worse before it gets worse.
Yeah. Well,
the good news is that as humans, we're very adaptive and we always survive. Now, how that's going to look and what's going to happen, we'll see. But I firmly believe that we can work our way out of it once we figure out what the actual problem is. And, I suspect that as tomorrow we'll see the beginning of one of the answers, right? We're going to see what they do.
Yeah.
The fact that it's actually this reliant upon one person making a comment or looking at his
It's
notes to
horrible.
figure out where we're
It's
going in the
horrible.
future is kind of a bigger issue. I think, you might agree
Oh,
that
yeah.
it's like,
Yeah.
we should have more clarity than just one person making a comment that's supposed to
Yeah.
guide us out of this financial turmoil we're having.
Yeah. Yeah. I mean, like Warren has been getting after Jay Powell for a while since we started this rate hiking cycle, but you could look directly back at Warren and the rest of Congress and the Senate and just be like, where have you guys been legislating anything productive for the last 20 years?
Mhm. Right.
It's kind of like the pot on the kettle black, at least to me.
Mhm. Well, it's just a big game of point the finger. Well, they spent more too. Why are you blaming us? They spent more.
Yeah.
It's like, well,
Yeah.
that's not too wrong. It's like, haven't we learned two wrongs don't make a right?
Yeah. I don't know what the thing that I kind of distill, I think a lot of it down to is just kind of what I kind of think of as corporatism.
Mm-hmm.
Basically big money, big government, big business, all operating together to sort of enrich themselves with access to each other in the system. And, just kind of what I think we all see day to day.
Yeah.
And I think Yellen inadvertently let the cat out of the bag a couple of days ago, and she was like, well, I don't know if the small banks in Oklahoma will get a full deposit bailout.
Mm-hmm.
And it's like, well, why not?
Mm-hmm.
And I think she started to walk that back, if my memory serves.
Yeah,
but
I think they did that today a little bit.
Yeah. So, but it's like, like how can you openly just say like, well, you're not big enough or important enough to, have access to this program. It's like, okay, that's great. Like, thought we were in a democracy. Clearly we're not. So you asked me the wrong question. But this is kind of what I think through, all the time. Yes. Have money in a variety of different places, keep some canned food around and some water. If you're in Texas, hopefully you've got a gun around. Like, there's little things you can do to, at least protect your small unit if things truly go to help a hand out.
I think that, again, if there's any hope, the one thing that I will say is that I'm very pleased and very happy to see that people in the younger generations are holding more people accountable, and hopefully they will be able to look in the mirror and I hope they hold themselves accountable and start to make some really tough decisions, because they're not wrong. We've got this older generation in Washington that maybe shouldn't be ruling, leading. And then we have a younger generation that just hasn't seen enough yet. But as time goes on, I really hope so, because, people in my generation, Gen X, the forgotten generation, we're tired. We're getting in the middle. You got to remember, we were the ones that literally. It was our parents' generation were the first ones that kind of came out. It was our generation that has really put up with a lot of it and agreed. Right, social reform started happening in my generation. It was our generation that did start raising the children that are actually really involved, which is thrilling. But please do something, because we don't want to do it.
Yeah, it's tough. It's tough. I mean, that the whole podcasting medium is just great for all this stuff, because I feel like there's just much more velocity of people having conversations, and I pick up so much just from kind of listening to people here and there. And I think it's all good. I mean, I think people are very aware of our problems. Everyone, it's like any good deal, everyone should leave a little bit unhappy. Like, if we can all kind of come to terms around that, I think we could probably actually do something. But
that's right.
We'll see.
Yeah. And as long as people remember, no deal is better than a bad deal, then we're good.
Yeah. Well, I mean, we're good at nothing but gridlock. Like, we haven't done much in like 23 years. So.
Oh, my goodness. Awesome. Well, I think we're out of time, right?
Yeah, I think this is good. Let me, any last quick things we can cut the recording here?
Yeah, I do think that, and it's funny because I really do. There's a book that I read years ago called Cryptonomicon by Neil Stephenson. Did you ever read it? Did you hear about it?
Oh, you know what? I've got a couple of those that I need to get through. I will add that to the list.
That book is and was probably the single most eye-opening. It was basically Bitcoin before Bitcoin came. So you've got to read that book. It's awesome. It's great.
Okay. Yeah. The one book I could trade you maybe is a Bitcoin Standard. I don't know if you've read that or not.
No, I haven't yet. Yeah.
That's a good one. It basically kind of talks about maybe replacing the Federal Reserve with a Bitcoin standard.
Mm-hmm.
Interesting take. But yeah, Frank, it's been great. We can leave it here. Where can people find you if they want to find you?
So they can Google Money in the Bank with Frank. You can find me on the YouTube channel, The Merge, and on weekly and every once in a while we'll do something like this. So it was good talking to you. It was great being on the show with you, and hopefully we can do this again because I've got some things that I'd love to ask you that I knew we ran out of time.
Oh yeah. No, we can do it anytime.
Perfect.
But cool. Yeah. Thanks for the time today, Frank.
Yeah, my pleasure. All right, bud. Take care.
Yeah.
Bye. Thanks for watching. If you like this content, you can find me on Money in the Bank with Frank on all of your favorite podcast platforms, on Facebook, on LinkedIn, on our YouTube channel. Look forward to bringing you more content like this in the future. Thanks.